Hello forex traders, welcome once again to this amazing channel. Today we're going to be analyzing silver and what silver may likely do throughout this month. So stay with me and as I uncover everything that silver is trying to hide. So therefore, you all know that I'm a drop-down analyst, so I'm going to be starting from this weekly time frame down to the 4-hour time frame. As you all know, the 4-hour time frame, well, each time frame has its own uses. Each time frame has its own use. So how do I usually trade? If you watch my previous videos, you will know how I trade, and if you have been following me, you will know how I do trade. And if you have not, if you are new in this channel, please make sure you click that bell icon and click that subscribe button so that you'll be notified each time I release or I upload a video of mine. So let's go. On silver, on the weekly time frame, I could see a reversal chart pattern. A reversal chart pattern. This is a left shoulder, this is a high head, and this is a right shoulder. Now this is the neckline of the head and shoulder. Now market has broken it with this bearish engulfing candle and pulled back. Now let's see what the character that classify or characterize English that characterize a pullback and an impulsive move. You all know that a consolidation takes more time than impulsive move. Are you understanding? So this is a pullback, this is a corrective move, a correction move, and this is an impulsive move. Now if you check it very well, this is the neckline of the head and shoulder. Now this is very clear, you can see it, the bearish candle and the pullback. So I'm expecting silver, not that I'm expecting it, be expecting silver to come to this direction, to this next place as take profits. Next target for silver is 51.79755 basic points. Be expecting silver to reach that point before any decision making. So therefore, let's get the analysis started. Now back to the daily time frame where everything is more clearer. You can see that the pullback was currently on a 50 pip retracement level, 50/60 pip retracement level. That is the golden ratio. You all know that is the golden ratio. As you can see, market has pulled back to the 50 pip retracement level. Look at it, market is currently on the 50 pip retracement level. What do you see? When market came back to this zone, it pulled back down, it came back here to the 50 pip, the 50 pip held it and pulled it back down. Then later on it went back again to the 50 pip. So there are likely two things that will occur. We all know that this thing is going to go down to the downside, but market will always like doing this thing. So what we are going to be doing, we're going to be exercising patience. Patience matters a lot. As you can see, the market has created something like a double top on the key level here, and this is the neckline. So we're going to be exercising patience. Market may likely go back up to complete, to touch this 60 pip retracement level before falling back down. But if market does not do it, we'll be expecting market to drop to the downside. But as you can see, there's something I don't like about this pair, like this way this pair just did. The pullback is somehow, I'm not comfortable with the pullback. Are you getting me? This counter trend line is not giving me what I want. Are you getting me? So I'm going to be going to the 4-hour time frame. In the 4-hour time frame is the time frame I usually enter trade. I do take my trade. So on the 4-hour time frame, what can I see? On the 4-hour time frame, I could see, yeah, the pullback is actually looking matured on the 4-hour time frame. So I will buy the pullback I will buy this pullback. I will like this pullback is okay for me, so I don't have any concerns on this pair. So what are we going to be waiting for to take advantage of this? There are two things that may likely occur if the market should rally out from this. Then we won't take trade from there because we are not aggressive trader, we are conservative trader. So we're going to wait for a series of breakouts, like a breakout, then a pullback. Once you see a pullback to this place, the pullback should go further down, then another break. Once you see that break, what we are looking for here is a quality trade. Quality trade matters a lot. Then we'll be taking advantage of it from here. We can be taking advantage of it from here. We'll be entering short from here because there will still be another pullback at that point there. Our stop loss is going to be here, then our TP is going to be here, take profit is going to be here. So that's what we're going to be waiting for. So the market is going to be dumping. The market is going to be dumping anytime soon. So the ability of us being patient enough matters a lot. If we're not patient, the market will take us out. But before markets, this is what we're going to be expecting market to do. That's if market should break out, we'll be expecting a pullback, then retracement. Are you getting? But there's another thing again that the market may likely do, and if the market does it, we will still catch it. Now, that is if the market should break out of here with a bullish engulfing candle and close. That means the market does not want to still go up. But as I can see this thing that is here, if the market should do something like this, leave it alone. Just leave it alone. It's better for the market to rally up, and it's better for you to lose setup than for you to lose your money. It pains when you lose your money than for you to lose setup. If you lose setup, you'll go again the next time with your money intact. But if you lose your money, which one will you use and go again? Nothing. So a patient trader and a disciplined trader is more better than an aggressive trader. Are you getting me? So that is all what I can see on silver currently. So you heard it from me. Wait for silver to break this counter trend line. Once it breaks it, wait for a pullback. You either look for trading opportunity from this pullback. You either look for trading opportunities from that pullback, then your stop loss will be below here, then your TP will be here. Are you seeing? Or you wait for a breakout. You break out of here. You wait for a or you wait for a breakout and you put your stop loss here, your entry here, and your stop loss here. Your take profit will be here. So that's how it is. You either wait for it in such a way, or you enter it at that point when the market pull back. You look for your trading opportunities there. That is if and how to enter trade at that point there. If you see market should break out of here and pull back there, you should be scaling to the 15 minutes time frame. Wait for something like this on the 15 minutes time frame, and if you don't see it, then you let it be. These are rules that I set that keeps me in check after the market has broken out of this in the 4-hour time frame and pull back down, and the pullback is looking matured. Wait for something like this in the 15 minutes time frame. A consolidation. Wait for a consolidation, then a breakout of the consolidation. Make sure the candlestick is more powerful. Then from there you can take trade. You can take trade with high risk to reward. You can take trade from here. From here you can take trade. You can enter here, stop loss beneath here, then take profit here. So your risk to reward can be 1 to 5, 1 to 6, 1 to 8 from that time frame. But The problem with the time frame there is that market has a particular place it reached before taking. Market can reach this place here, then reverse and hit your stop loss, then still go back to your direction. That's only the take profit. That's only the disadvantage of this entry. But it is very high. It gives you a very high risk to reward, or you can drag it here anyone you want. But the risk to reward will still be anyhow. But so far you can enter here and market break out of here with a bullish engulfing candle on the 4-hour time frame. Then you can still the advantage of this is that once you enter on a lower time frame, 15 minutes time frame, and the 4-hour time frame should also sink and break out of here with a bullish engulfing candle, then you can see enter here and enter here. You understand? Carrying your stop loss that you entered here to this place here. So you'll be entering like two position here because you know that this is very solid. Are you getting? Here will be giving you 1 to 5. Here will be giving you 1 to 3. So in this whole trade that is here, you can be getting 1 to 8 risk to reward. 2 to 8 risk to reward. 2 to 8 risk to reward. So and it is very nice. 2 to 8 risk to reward means that, for example, if you're risking like $100, you'll be making if you're risking like $200, like each of your trade, let me assume you're risking each of them $100. So the first one will give you $500, the other one will give you $300. So you're making $800 in return. Are you getting me? $800 return on this trade. So it is very nice. So only what I'll just let you know is to exercise patience and wait for this trade to play off. Once it play out, then I'll advise you to take the trade without thinking twice. So if you like this content, please make sure you do like and subscribe to the channel. Make sure you also recommend it to your friends and anyone that's also having hard time to learn forex. Actually, forex is not hard. It's other people that makes it hard. By the way, if you don't know how to plot your key levels, your dynamic areas of supply and demand, you can send me a DM and I'll send you a private video on how to do it free of charge. You don't need to pay for it. I just need to see the amount of people that are willing to learn so that I'll know if actually there are other serious people out there with this zeal of learning. So have a nice day and peace out.